All right, y'all. We are live. We are live, and I appreciate everybody who is seeing this live right now in the workshop. I make sure I have everyone muted right now because I want to make sure that not only you um, in the workshop, also those viewing this on the replay, whether it's on YouTube, whether it's in snippets, I want to make sure y'all get all the information, right? And you're able to get everything that you need. So again, welcome everyone. Today we're going to break down stocks and crypto in the simplest way possible. This is a beginner session. You do not need experience at all. By the end of this class, you will understand these four things: what investing actually is, why prices move up and down, the difference between stocks and crypto, and how to get started safely. Okay, that is my goal. Not going to take too much of your time. Definitely want to keep this about 30 minutes or less if possible. But my goal again is to make sure that you're comfortable and confident by the end of this small session. So let's start it off, and let's keep things simple, okay? Because what we don't understand sometimes is that understand trading is risky, right? So that's the disclaimer. Trading is risky. So please do not risk any money that you can't afford to risk. Don't put the house money down. Don't put your bill money down, right? You don't need to do any of those things when it comes to this. Okay, so you just want to make sure that, hey, you're listening, you're understanding, you're taking notes, right? And you're taking it to another level. Okay, so what I want to talk about next really is what is investing. Okay, and investing simply means that you're putting your money somewhere so it can grow instead of just sitting still. So I'm gonna break it in two parts, right? I'm gonna first start with the stocks. As you can see here, when you buy a stock, you are buying a tiny piece of a company, right? So a tiny piece of the apple, right? So for example, for my Apple user, if you have a iPhone, you should be investing in Apple. You know why? Because you are invested in Apple, right? You're already buying the iPhones, the AirPods, the AirPod Maxes, or whatever these things are called. You are invested. These are the companies you should be invested in because these are the companies that you're actively utilizing and participating in, right? That's what makes the most sense, okay? Especially when it comes to that. So, if you buy the Apple stock and you own a small part, if the company grows and makes more money, guess what? Your piece can become more valuable. So, yes, that small $10 piece or small $25 piece, and I'm just giving examples, right? That can potentially grow if Apple continues to grow. If you think Apple will continue to grow, hey, you should invest in Apple stock, right? And again, financial disclaimer, I am not a licensed financial advisor. I do have licensed financial advisors on my team that also helps our student athletes, parents, and coaches when it comes to NIL contracts and negotiations, as well as long-term wealth planning, all the way up to mom, dad, grandparents, all the way up until wealth retirement as well. So we do have them on staff, but this is just for educational purposes, okay? But now let's talk about the crypto, okay? Crypto is digital money that lives online. Ironically, we've been going to digital for a long time, right? The introduction of the credit card, okay? That's digital money, right? It's on a ledger, okay? It's just numbers being transputed in different places, right? Now we actually have a cryptocurrency where Bitcoin is the first, and Bitcoin is often called digital gold, right? It's called digital gold because one thing you hear about here is, and another one that I'm going to talk about is something called Ethereum, because Ethereum actually helps power apps and technology online. So these cryptocurrency or these stocks, you want to find things that actually have potential and impact, right? Because you don't want to invest, and that's why I don't promote meme coins, right? Because meme coins is like there's no impact, right? There's no value. They're not doing anything. They're just being created to pump and dump. And what pump and dump means is, hey, I can just create a coin called Travis Coin, right? And hype it up, let it get to $1 million. And basically I withdraw all the money and you're left holding nothing. right? That's a pump and dump. But something like Ethereum, again, it helps power apps and technology. So it has an impact. It has potential. It has a use case, I would say, in that sense. So both stocks and crypto give your money the opportunity to grow. Instead of only working for your money can start working for you. This is also something I've talked about before when it comes when I talked about the cash flow quadrant, right? We're employees. We're told go to school, get good grades, get a good job, right? And work for 40 years. Okay. But then we say, hey, I need to smarten up. I want to get on the right side of money. And on the right side of the quadrant, we have the B and the I, which is becoming a business owner, which business owners create systems, right? Just like the Amazons, it's a system. McDonald's, it's a system, right? And then the I, the investor, will say, hey, I'm going to allow my money to be my best employee, and my money is going to work for me. Okay. And I think that's very important. So again, my next question is, what kind of phone do you have? Right? Like we talked about the Apples. Do you have an iPhone? You should be invested in Apple. Okay. If you have an Android, hey, what are some Samsung stocks? Right? What is someone called? I think it's pronounced right. Huawei. Right? You know, there are different stocks, you know, especially on my sneakerheads. You wearing Nikes, huh? You got any Nike stock? That's basically how I, you know, talk, because that's what made it easy to invest for me, because I invested in the things that I was already invested in. Right? You know, I go to Walmart every week. Why am I not invested in Walmart? Right? Target. Do you go to Target all the time? You go to GameStop? Well, maybe not GameStop, right? And that's neither here nor there. That's for another conversation. But things that I am invested in. Hey, I know a lot of people who say, oh man, you doing a fantasy? Actually, yeah, I'm invested in DraftKings. I have stock in DraftKings, right? So, you know, things that I utilize or things that I see important and necessary, that's what I choose to invest in. What I would say is you need to find to do the same. So another question is, what is the Federal Reserve? Do you even know what the Federal Reserve is? Right? The Federal Reserve basically, honestly, is a cartel. Basically is a monopoly, but owned by multiple people, right? So basically, I can't remember the year, but when the gold standard kind of went away, right, the bankers said, hey, y'all, how are we going to keep this money in play? So they created something called the Federal Reserve. The federal part makes it seem like it's legal. It's a part of, you know, government. And then reserve makes it seem like there's something there. But again, if you recall, you know, they always talk about the U.S. being in 26 trillion some dollars worth of debt. Okay, so if we're in debt, what's in the reserve? Right? Who's protecting it? And the funny part is the Federal Reserve is basically a ability to say, hey, if anything happens, guess what we can do? We can print more money. Right? We can just print more. I just get to print more money. Right? And that's why cryptocurrency now is so impactful, because with certain cryptocurrencies, especially Bitcoin, once it gets to a certain amount, you can't make more. Right? It's a scarcity. Right? Just like dollars. Hey, they can make more dollars. They can print more dollars. They do it all the time. Right? And that's why I think it's so important to educate yourself and actually get into the stock and crypto game. But a lot of people ask, you know, sometimes, hey, why does price go up and down? And price goes up and down because of buyers and sellers. Okay. The more people buy, right, guess what? Price goes up. Okay, well, hey, there is a high demand for this product, so the price goes up. Right? When there is low demand, okay, the price trickles down because, hey, nobody's buying it. Just like things that are on the show for a long time, when nobody is buying this, hey, let me bring the price down to see if somebody buys. Right? A prime example of this is sometimes when you see on Facebook Marketplace. You go on Facebook Marketplace, see somebody put let's say a computer, right? It's $1,000. You probably looking like, man, ain't nobody paying no $1,000. The person selling it believes it's valued at $1,000. But again, after a certain period of time, me as the person trying to sell it, I see the demand for it is very low. So maybe if I cut the price down, it would increase demand and somebody may buy. Okay, really that simple, right? Prices move because of people. When more people want to buy something than sell it, the price goes up. When more people want to sell something than buy it, the price goes down. Again, think about sneakers, concert tickets, or even that new iPhone we were just talking about. If everyone wants it, the price is sky high. If nobody wants it, it's probably cheap, right? The market is just people making decisions every day. And that's why I say, hey, invest and make decisions on things that you already use on a daily basis. The market is just people making decisions all the time. That's it. Fear makes people sell, and excitement makes people buy. That's why you see when Bitcoin is going down, I'm panic selling, I'm getting out, it's going to crash, right? But let it go back up to 100, now everybody want to buy because it's exciting, people are hearing about it, you know. But by that time that you see it on the news, it's too late. You missed the move. You're supposed to get in at 67K. That's what it is currently at this time of the video, February 19th, 8:46 p.m. It's currently around 67, 68K, right? But it previously hit 120, right? So if I'm buying at 70, right, and it goes up to 120, the portion or amount that I bought has increased. Okay, right? So these are actually the people that impact the price. When I say people, I'm also talking about governments, commercial banks, who else? Retail traders, right? Things of that nature, as well as a lot of these, financial firms as well, like hedge funds. They're heavily involved in these markets because their purpose is to help their clients make money. All right. So let's talk real quickly about stocks versus crypto, right? Because both of them allow your money to grow, but they move differently. And this is what's important to understand. And then you have to understand which one is best for you. Stocks are usually slower and more steady. Okay. Again, they still go up and down, but generally at a lower pace. Okay. As you can see right here, that's a PS5. So, hey, anybody got Sony stock? Hey, right. You got PS5, but you ain't got no Sony. You got $500, $600 worth of games, $1,000 worth of games, but you ain't got $1,000 of Sony stock. Come on, man. Like, what are we doing? What are we doing? Crypto, right, moves much faster. It can go up quickly and it can drop just as quickly. Right? You got to think of both of these like a roller coaster. The stocks is just a slower ride, where crypto is that fast, speedy roller coaster that's taking those crazy whips and turns that almost give you whiplash, right? Again, neither is good or bad. They just carry different levels of risk, and you need to understand which level risk are you. Simple as that. And as a beginner, to me, I say it's important to understand your simple comfort level, okay? So what I actually want to share now as well is I actually want to share TradingView, okay? And I want to share TradingView simply because TradingView is a free app or a free site that I utilize, where I actually like to look at the charts and kind of look at different movements, especially if I may want to get in day trade or anything of that nature. I want to look it up. But first, there you go, Apple. Right? Let's see about some Apple stock. Okay. I want to check on Apple. All right. So now I'm looking at Apple stock. As you can see, this is a 4H, which is a 4-hour chart, which means each candle, as you see, green, green, red, each candle is a 4-hour period in time. Okay. So I'm going to go to the daily, right? And I want to look back at it. I want to kind of look out a little bit. So my question is Apple going up or is Apple going down? All right. Well, it looks like it's going up, right? It just looks like Apple is going up. Gosh almighty. All right, let's look at that. Apple's going up. All right. So in kind of what I look at a lot of times, and I don't want to get, because it's beginner level, I really don't want to get into the details of the language per se, but understanding an uptrend versus a downtrend, right? You see holistically, Apple is currently in the uptrend, but guess what? Things do what? Things pull back, right? Just because you see the upside, guess what? You see this smooth pullback right here, right? And this is what I call great entries. And the reason why this was potentially a great entry because of this order block here, right? And basically, let me see if I can explain an order block. Let me see, explain order block. Simplest way, right? Because when I'm trading and when I'm looking into what an order block is, you know, beginner version, think of it like big investors can't buy millions of dollars at once without moving the price, right? So this is probably when you see, you know, let's say a CEO may sell off, and then it causes this to crash. Or you may see the JP Morgans of the world saying, hey, crypto's a scam, don't buy it. Then everybody's scared and selling out and they get it for cheap. And now guess what? JP Morgan offers crypto education. They have millions of crypto now, right? So think of it like that, right? So big investors who can't buy millions of dollars at once without moving the price. So they leave footprints on the chart, right? And that footprint is what we call an order block, right? So make sure you're subscribed and stay tuned to hear more about that moving forward. Okay, but simple as that. Great entry point, 241.09. Now it's already back up to 285. Look at this. We're in a pullback, right, of 260. Okay, because guess what can potentially happen, right? We can at least see it go back to that most recent high, right? Let's see. That high was right there. That's what was most recent, right? That's the ceiling. Okay, current ceiling, right? So it's bouncing off that ceiling. So based on the trend, I'm going to assume, hey, I'm going to at least hit this ceiling again, right? And now I want to see what happens. Will it go past it, or will it again reject or bounce off that ceiling, right? Because in markets, you have ceilings and you have a floor, right? The floor is the bottom. The ceiling is the most high, right? Right. And that's just something I wanted us to look at quickly. But what I really want us to look at and notify as well is something that I'm going to share here that I'm looking at is the safety and mindset, right? Because safety and mindset is key, right? And here I want you to follow these 5 beginner steps, which is 1, start small. 2, think long term. This is not get rich quick or overnight success. Don't chase the hype and don't panic sell. I know this is difficult because as humans, we have emotions. Okay. And last but not least, only invest what you can afford to leave alone, or as I like to say, afford to lose. If you're putting money in here that you can't afford to lose, you need that money. That's the bill money. That's the baby diaper money, milk money, Similac. Don't do it, right? Be patient, be disciplined, and make sure you're always thinking long term, because investing is not gambling. That's not what we're doing here. If you want to gamble, hey, go ahead, DraftKings, FanDuel, right? You know, parlay it up, okay? But the goal here is to allow your money to grow over time if you respect the process, right? And that's what I want y'all to focus on. I want you to focus on respecting the process and making things move forward. So again, I want to appreciate everyone who came in today to talk about our, you know, basics of investing for stocks and crypto. Until next time, I'll see y'all on the other side. Mr. SW3 is out.